Welcome everybody to our 2024 FBT update with Paul Mather. This event is brought to you by Tax Nuggets Academy. I'm Joyce, and I'll be your host for today. It's going to be an epic event. We have more than 750 people joining us today. It's going to be hectic. If this is your first time Nuggets event for you, welcome. Great to have you with us. And welcome back to our subscribers, our Nuggeteers. Thank you for joining us today. As usual, the chats are open for you all to engage with us, engage with each other. Feel free to say hi in the chat. Let us know where you're joining from. Anyone from Western Australia coming in bright and early, good on you. I am based in Melbourne. If you have a question for our instructor, can I ask that you put it into the Q&A section, which is separate from the chat, so that I can look out for it and make sure that Paul gets back to you. Oh, Nahal, hi from Perth. What time is it there? 7:30. Well done on joining in today. So for those that are new to us, let me introduce ourselves. I'm the co-founder and CEO of Tax Nuggets, and we're here to change the way accountants do their CPD and in-house training. So we're a subscription-based all-you-can-eat platform. Just like Netflix, which means you get unlimited access to all our live events. This is just one of 3 or 4 that we do every week. We have 4 events this week, and you get replays of all our previous live events and resources. This includes structured programs like our grad program that we just had, as well as an FBT program coming up next month. Also with Paul, and monthly tax updates and special topics. So this gives you the freedom to explore learning what's only relevant for you whenever you want. So tax is not boring, especially when it's relevant to what you do every day. So our instructors are leading practitioners like the one I'm about to introduce to you. So they teach real world skills. There are no lectures here. And then tracking your CPD as well is 0 effort because we do it for you with our on-demand automated CPD reporting. And it's all for 1 monthly fee only, no lock-in contract. So if you're curious to learn more, please head to our website, taxnuggetsacademy.com.au, or just Google us and check us out. Time to introduce our superstar instructor today. He's the founder of FBT Salary Packaging Solutions. He lives and breathes FBT salary packaging and employment taxes. He's been a member of the ATO's FBT stakeholder group since 2005. Oh gosh, that's like 2 decades, Paul. Anyway, put your emoji hands together to give a very warm welcome to Paul Mather.
Thanks,
Good
Joyce.
morning.
Good morning. Thanks, Joyce. And hi, everybody. Welcome to today's FBT update session.
It's huge. All right, what are we covering?
All right, so we've got a fair bit to cover in a relatively short period of time. Look, electric vehicles is a really hot topic at the moment. So we're going to spark up the session starting there. We also want to talk about car parking. There's been some significant change in that area, and what we're finding is that practically and technically, a lot of businesses are really struggling with understanding how the new rules work, and confused by the fact that the tax office has broadened the scope of the definition of what a commercial car parking station is. I think one really key area of change for this year, what we're seeing is the ATO's focus. The ATO is really increasing their focus around FBT. There's a big gap. There's a growing gap in terms of revenue loss or revenue that's not being reported around FBT. So the ATO is putting into place a number of programs to help trying to effectively close up that gap. The ATO have also been very transparent in terms of their FBT audit activity. And so we'll share some examples of those FBT audits today as well. One key change that's on the horizon that kicks in on 1st of April 2024 is the reduction in FBT record keeping requirements. So, there's different things there to see, positives for certain employers. Probably not as much as we would like, but at the end of the day, we've always got to welcome, any changes that are going to help reduce record keeping, help reduce compliance costs.
Amazing. Let's get cracking.
Okay, so so the ATO, I shouldn't say the ATO. The government introduced an exemption around electric vehicles. So it's not new. It came in 1 July 2022. But what we want to talk about today is more about the recent guidance that's been provided by the tax office to help us understand this exemption, when we can claim it, as in when employers can claim it, and also just some of the detail around the car expenses, which is also very important. As I said, in terms of the current FBT landscape, as I said earlier, the ATO has broadened the definition of what a commercial parking station is. We've also had a recent court decision that I'll talk about as well in terms of testing what the primary place of employment is, and also one of the key tests around whether we have a liability to FBT in relation to what's called the vicinity test. The heat's really going on in terms of FBT, and a big focus, a new program that's being rolled out is a data matching program around novated lease arrangements, which we'll talk more about shortly. And also the ATO has extended their random inquiry program to FBT and employer obligations. As part of the novated lease data matching program, the ATO is introducing what's known as, the technical term is nudge messaging, which is a really interesting description. But I guess nudging or reminding employers, but more specifically their employees who have novated lease arrangements, that they cannot double dip on their motor vehicle expenses. So, it's Easter show time in Sydney at the moment. You can double dip your hot dog into the sauce, but you can't double dip on your motor vehicle expenses.
So it's like, is that like claiming a deduction in your personal tax return? And what's the second one?
Exactly, Joyce. It is. It's so with a novated lease arrangement, effectively all of the motor vehicle expenses in relation to that novated lease arrangement are already deductible. Through that arrangement, the employer is already claiming all those expenses. So if the employee uses their novated lease vehicle for business purposes and claims back from, say, the employer on a cents per kilometre basis for that business travel, there just is no issue with that. That becomes assessable income to the employee or the individual in their personal income tax return, but they then can't go and double dip on those motor vehicle expenses. So, it's interesting. As I said, it's not really an FBT issue, but with this novated lease data matching program, it's not just all about FBT. It delves into other areas of tax as well. And so the ATO want to be reminding individuals in terms of, not going through that double dipping process. Otherwise, they're likely to get a pretty swift whack on the back of the hand, probably more than that, actually. As I said, there's also what I want to discuss is the reduction in record keeping requirements to help employers effectively reduce the compliance burden. So, but that doesn't kick in until the 1st of April 2024. So it's relevant for the 2025 FBT year. So I think, as we all know, the FBT year begins 1st of April, ends 31 March. So the key dates we're looking for, if we're lodging direct with the tax office, we have to lodge and pay by the 21st of May. So that's if we're lodging direct with the tax office, or if we're lodging via a tax agent and the tax agent is not on the ATO's FBT lodgement program, or is not lodging electronically. So there's a couple of key things to remember there in terms of those processes around lodgement. If you are lodging through a tax agent, and the tax agent is on the ATO's FBT lodgement program and lodges electronically, then 25 June is the final day. So that's in terms of lodgement and also payment as well. So, FBT is a sprint. It always is. There's not a lot of time. Once we have our Easter break, coming up, and once we get past Easter, when we've already lost a couple of days, really, in terms of Easter, to prepare that return. We lose Anzac Day. We've got the school holidays coming up. It's a short sprint, and there's a lot to juggle for people. Just wanted to go through the changes in terms of the FBT rates and thresholds. So the FBT rate's the same, the gross up rates are the same. The car statutory percentage remains at 20%, unless you have a very old vehicle, a pre-2011 vehicle. Then you may be able to access the old 7% or 11% stat fractions if you're traveling more than 25,000 or 40,000 kilometers in the year. As I mentioned, the lodgement dates are the same as the prior years. What has changed, though, is that the record-keeping exemption threshold has been indexed up from 9,181 to 9,786. Now, I'm not really sure if many businesses are actually aware of this exemption threshold, because it's an exemption from record keeping. It's something that I really struggle with in terms of having an exemption from record keeping, for a small business, because this is really one of the big challenges for small businesses, for accountants in practice, getting their small business clients to keep FBT records. So it's not something that we, I guess, practically look at and apply or talk to our clients about. It's something, to be honest, we pretty much ignore it. The car parking.
Will you be covering that one a little bit more later, Paul?
Not really, because of the fact that, the thing with the record keeping exemption is that you determine a base year, and if you're under the threshold in that base year, whether it was 2022, 2023, or the current year, and then sort of the theory behind it then is you don't, once you've formed that base year, then you don't need to keep records going forward. But it doesn't really make sense, because how do you determine, whether you're under the threshold in future years, without actually going through the process of, keeping FBT records, doing calculations.
Yeah. So this threshold is if your taxable value is below that $9,000 amount. Is that what the threshold is?
It's your liability. If your liability is below that threshold.
Oh, okay.
Yeah. So so it's not a grossed up amount. I just saw a question pop up. It's not based on grossed up. Yeah. But look, in all honesty, as I said, it's just something that I ignore. Yeah. It's not something that we, it's there.
Yeah.
It's one of those things you go, how did they even dream this one up when they created the law? Really.
Understand.
Yeah.
Yep.
And we could say that about quite a few things in the FBT law, but the car parking threshold. So the car parking threshold, we're into double figures. So it's $10.40 for the current year. So if there's a commercial parking station within 1 kilometre where you provide the parking to your employees, that charges more than $10.40 as its lowest all-day parking fee charge, then you are liable to FBT. That's the basic simple rules around determining whether you're liable to FBT on car parking or not. The benchmark interest rate, that's increased. It's been at 4.52% for the last couple of years, and that's been increased to 7.7%. But yeah, I think the key here is just that the main rates and thresholds and dates are all the same as prior years. Oh, there you go. I should have clicked a bit further just to get those ones highlighted where we've got the changes. Last week, the Tax Office released the 2024 FBT return form and instructions. And so what I've replicated here on the screen is just the question 23, where we need to provide the details of the fringe benefits provided. So the return form is exactly the same as the prior years, apart from the change in dates. But the one thing they have changed on here to make it clearer to employers when completing the return is they've included some crosses here, or X's. So these are labels that we should not populate when we prepare our return. So there's a lot of confusion in terms of when do we need to include the number of benefits being provided. when can we apply an employee contribution, which is column B. Column C, when can we reduce the value on a benefit? So what the tax office has done is made it clearer to show that, for example, if we've got a benefit, if it's a car, we're using stat formula method, or if we're using operating cost method, we've got a logbook, there's no reductions that we can apply here. We can apply a contribution, but there's no reductions. Similarly, with a loan or a debt waiver, the employee can't make contributions towards a loan or debt waiver fringe benefit. Housing accommodation, we can see there that there's no reduction that's available as well. So I think it's good that the tax office has done this just to make it clearer. Before they used to have sort of a slight shading color, but now they've made it clearer, and that's obviously because of the fact that employers are incorrectly reporting numbers into those labels when they can't do that.
So this is tax office version of UI UX update, user interface update.
Yes.
I guess. A quick question from Kathleen, which is relevant here. So if an entity provides car benefits, but employee contributions completely wipes it out, you can see that column B there. Does a return still need to be lodged?
In my view, I think the first question there is, should the organisation be registered for FBT? And my view is that if you employ people, you should be registered for FBT.
Mm-hmm. Mm-hmm.
And then even if it's a nil return, so in the example given, the contribution wipes out the FBT effectively, you should still lodge a nil return, because you need to lodge that nil return to create that assessment with the tax office as a way to protect yourself from the tax office going back more than 3 years in terms of amending or assessing. The tax office have a different view. The tax office view is, if you don't have a liability, you don't need to register for FBT. But my view is that if you're not registered and you're employing people, you're not registered, you're not going to think about FBT. But if you're registered, you have to think about it at least once every year, preferably more often than once a year. But yeah, I think registration is key. And we'll talk a bit more about that shortly when we'll talk about the gap in the number of employers who are not actually registered for FBT.
Yep. I think we'll come back to this one. I see your question, Karina. I think, we'll leave it towards the end just so that we can keep moving.
All right. So electric vehicles. So as I said earlier, this isn't new as such, because the exemption came in on the 1st of July 2022. So effectively, the exemption, subject to the requirements, means that employers don't have to pay FBT on eligible electric cars, or more importantly, the private use of eligible electric cars by employees. And also there's no FBT on what's known as associated car expenses, which is just really a bit of a fancy term for car expenses. Because of this exemption, and also like the value of electric vehicles, the saving of FBT is significant. So there's a really big opportunity here for employers, I think for accountants in practice, to talk to their clients around ensuring that they have up-to-date salary packaging offerings and policies, so that the employers can take advantage of this in the context of their employees through salary packaging, but also employers can take advantage of these savings through owning or leasing electric vehicles as well. So it's a really big opportunity. As with any exemption, we've got certain rules that we need to meet in terms of being able to access the exemption. So the first requirement is that the car has to be a zero or low emissions vehicle. The car has to meet the definition of a car under the FBT rules. So it has to be a vehicle that's designed to carry a load of less than 1 tonne, fewer than 9 passengers. The first time the car is both held and used has to be on or after 1 July 2022. So that's in relation to a new or second-hand car. So that's a really important point, which we'll come back to shortly. In addition, the vehicle must not have been subjected to luxury car tax, either on importation or sale. And once again, that rule is applicable, or condition is applicable to new or second-hand cars. So what that means is, if with a new vehicle, it's usually pretty clear to see in terms of, when that vehicle was both first held and used, or when we purchase it. However, with a second-hand vehicle, if we're purchasing a second-hand electric vehicle, we need to be certain before we can claim the exemption that the vehicle for the first time was both held and used on or after 1 July 2022. So that means we need to know the history of the previous owner and their usage of the vehicle. And then in addition, we also need to know whether that vehicle had been subjected to luxury car tax previously, if it's a second-hand vehicle. So there's just a couple of little tricks in there to make sure that we can claim exemption on a second-hand vehicle. The car has to be used, privately used by a current employee or their associates, meaning family members. And significantly, as mentioned earlier, the benefits can be provided under a salary packaging arrangement, and the exemption will still be available. So this is part of the government is using the FBT law. They're using the salary packaging arrangements as a way to increase the uptake around the electric vehicles.
Amazing. Can I just get the audience a little bit involved and see who has used the EV exemption since it came out? A yes or no in the chat would be nice to see. So I have not seen it. Well, we've offered it in our company, but no one has taken it up. Lots of yeses. Oh, yep. I think it's like 50-50, you reckon, Paul?
Yeah, there was a lot of yeses to start off with.
Mm.
A lot of people making savings early on.
Yes. Have you got one, Paul?
No, I don't. I don't at this stage.
I thought you'd be the man, the first one in. But yeah. Anyway, moving along, we've got lots to cover.
Yes.
Thank you for...
I guess other key points to note around the electric vehicle exemption is that the government is going to review the exemption, and they're going to complete a review of the exemption, they're saying, by mid-2027. So we've got a bit of a window here. Yeah. And what they're going to do by mid-2027 is review the exemption and really look at the uptake. I've seen different articles recently where they're saying, the uptake isn't as strong as it should be. So, as I think more businesses, more employers are aware of this exemption, the advantage of the exemption, and then there'll be a big push from employees, so that I think if we ask this question again in 6 or 12 months, I think there'll be a lot of yeses coming through.
I do feel like there are more no's than yeses, which is fortunate, I guess.
Yeah. Look, it's still relatively new. Whilst the exemption came in 1 July 2022, the guidance from the tax office has been a bit slow. I think it's probably fair to say, but we do have some guidance now, which is, helping to make the rules clearer. So in terms of plug-in hybrids, the exemption applies to plug-in hybrids only. So not to the other types of hybrids where they don't plug in. But the exemption for the plug-in hybrids ends on the 1st of April 2025. So just over a year to go. But if you have a financial commitment in place prior to that date, then the exemption will still apply. So effectively the exemption will be grandpersoned or grandfathered, whatever the correct term is these days for that. So the plug-in hybrids were a bit of an issue when the law was going through Parliament, when it was going through the Senate. Senator David Pocock and the Greens said, look, plug-in hybrids, that's not going with the vibe here, in terms of really like zero or low emissions vehicles, because you can use petrol for the vehicle. So the draft law was stalled for a while, but a compromise was reached, and that compromise being that the plug-in hybrid, the exemption for that ends 1 April 2025. It will continue on, as I said, if you have a prior financial commitment in place. Even this is a real bit of a sting in the tail on this one with electric vehicles. Even if the benefit is exempt, and certainly if it's taxable, so we can't claim the exemption, the reportable fringe benefit rules apply. So this is a real pain because normally if we claim an exemption for a benefit, that's the end of the story. We don't have to do anything else. But here with the electric vehicle, we actually, if it's exempt, we still actually have to report that benefit onto the employee's payment summary. So we have to then effectively do an FBT-like calculation for it. The one exclusion here, though, for reporting onto the payment summary is if the electric car falls within the definition of a pooled or shared car. So a pooled or shared car means a vehicle that is used privately by 2 or more employees. If that's the case, then it won't be a reportable fringe benefit.
Cool. All right, we're going to really have to move you along, Paul. We are at the halfway mark and we haven't even done e-cars yet. So yeah, we're going to have to speed through it like an Aldi checkout, people. And I won't take questions, but put the questions in the Q&A and then we'll get to it at the end. Thank you.
As I said earlier, the car expenses are also exempt. The private use of the vehicle plus the car expenses are also exempt. The car expenses are just what we would normally, well, they're the same as basically the car expense exemption that's already in the law. So it's your rego, insurance, repairs, tyres, fuel, in terms of, charging the vehicle. Battery replacement is one sort of contentious area. So if you're replacing the battery with a battery that's similar to the existing battery, then it'll be a car expense. But if you're replacing the battery with one that has significantly advanced in technology, so, charges quicker, retains the charge longer, is more efficient with the use of the charge, then it's likely not to be a car expense. It's likely to be a capital cost. So that's just something to be aware of. Home charging station cables, and car parking expenses incurred while charging the vehicle are not considered to be car expenses, and so therefore are not exempt. So if the employer pays for, reimburses the cost of a home charging station or cables, they will be subject to FBT.
Yep.
The ATO released last month, PCG 2024-2, and so this is guidance or an option in order to determine the amount of the home charging costs for the year. So if the employee is charging the vehicle at home, then effectively we need to know the total number of kilometres travelled for the year, and then we can apply the rate that's been set in the PCG of 4.2 cents per kilometre. So for 10,000 kilometres, we're talking about a charge of $420. So then that's up to the arrangement between the employer and the employee, whether that's reimbursed or whether it forms part of the part of an employee contribution if it's not reimbursed, which is normally is not something to consider for an exempt benefit, but because we've got that reportable fringe benefit requirement, the contribution can actually reduce the reportable fringe benefit amount. So there's really 2 options. We can either use the PCG, use the 4.2 cents per kilometre, or we can ignore the PCG and basically work out our charging costs based on actual costs, if the employee has those actual costs. And some of the vehicles, I understand, can actually calculate the charging cost for you. They're that clever. So,
but yeah, I mean, good luck trying to figure it out without the, automated tracking.
Yes, yeah, that's right. So we'll park the electric vehicles for now, and then we'll look at car parking. So my interpretation of the new ruling that came out from the tax office, TR 2021-2, where they've broadened the definition of a commercial car parking station. My definition or explanation of it is that if it looks like a car park and it smells like a car park, then it's probably a commercial parking station. So what that means is that the tax office have effectively flattened the definition of what a commercial parking station is. Prior to 1 April 2022, shopping centre car parks were not considered commercial. Certain university and hospital car parks were not considered commercial. But now what the tax office has done in their ruling, and it wasn't a ruling that was warmly welcomed. There was a lot of negative feedback, criticism around the ruling. The ATO assessed, reviewed all of that criticism and feedback, but what they've done is they've effectively stuck to their guns. So now from 1 April 2022, shopping centre car parks, hospital car parks, university car parks are all considered to be commercial parking stations, only with a few exceptions. So the exceptions here that may apply is in relation to if it's a parking facility that's not operated by a car parking operator, it may still be a commercial car parking facility or car parking station. So ordinarily, a commercial car parking facility will meet the definition where it's operated by a car parking operator, but if it's not operated by a car parking operator, it may still be commercial if it has minimum of 2 of 3 characteristics. The first one being that it has clear signage from the street advertising that paid parking is available. That's the first characteristic. The second one is that there's mechanisms in place to control that entry and exit from the parking facility. So that might be boom gates, pay and display ticketing machines. And the third characteristic is that it charges more than a nominal fee. So as long as 2 of those 3 characteristics are present, it will be considered to be a commercial parking station, even where it's not operated by a car parking operator. So this is a significant change because what it means for car parking is that suburban shopping centres are now considered to be commercial. So it's pulling in all those businesses out in those suburban areas into the car parking FBT net. For those businesses that operate in or around hospitals or universities, they're also being pulled into the net as well.
Yeah, so if your workplace or the employer's workplace is close to a shopping center, then they're pretty much in the net, because shopping centers all-day fee would be significantly higher than, whatever the threshold is currently.
Yep. Yeah, more than $10.40.
Yeah.
Then, yeah. Compliance, focus, and reviews. So, is the ATO losing the battle with FBT compliance? So a couple of years ago, they announced an FBT gap. The first time they announced an FBT gap, and it was $1 billion. And it was about 22% gap. So a shortfall in revenue by 22%. More recently, they updated the gap to close to 1.3 billion. So now we're talking about a 28% gap. Now, this is significant because of the fact that the other taxes, income tax, GST, yes, they all have gaps. And in dollar value, their gaps are much bigger, but percentage-wise, their gaps are very small. So they're down in the single digits. So to have a gap of 28, 29% is huge. And so the ATO, is having to really act now to close the gap. The one thing that I think really stands out for me, and we're talking in terms of gaps, is that per the ATO website, as at 2021, there were 927,831 registered employers. So these are businesses that are employing people. But I would estimate that only a small fraction, 10%, it's probably less than 10%, are registered for FBT. So we're saying there's over 800,000 registered employers who are not registered for FBT. So if we're talking gaps, that's a big gap in terms of registered employers who are not registered for FBT.
And just, question to the audience, does that number seem accurate to you? What Paul's expecting, that only 10% of your, business clients with employees are registered for FBT? I wouldn't be surprised.
Yeah, look, it's definitely a realistic number. I mean, the conversations I'm often having with accounting firms isn't about how does our client comply with FBT. It's around, look, our clients don't want to register, etc. I did a training. I've just quickly shared something with you. I did a training session a few weeks ago. One of the attendees, it was a face-to-face training session, was asking quite a few questions around different benefits, health insurance, permanent residency, visa applications, entertainment, gifts, a whole range of things. And then in one of the breaks, she came up to me And she said to me, look, our business isn't registered for FBT. They have a lot of employees. It's a reasonable sized business. And I said, well, I just assumed based on your questions that you're definitely registered for FBT. You were just asking particular questions about what you include in your return. She said, well, not registered. She said, I'm here to basically find out how we can ensure we don't have to register, because my boss doesn't want to register. And I said, I think you're fighting a losing battle there. From what you've told me, if these are the types of benefits you've been providing, and we're talking into the tens of thousands of dollars easily. I mean, these are only the things that she raised. I said, yeah, you should be registered.
Yeah, whether it's a minor benefit or not, at least you lodge a nil return, and you stop, you kickstart the amendment period, right? And so the ATO can't go back that much. So Amy, love your comment. She says we have 99% of clients registered, only a few have liabilities. Most of them are nil lodgement. I make it a requirement. They don't get a choice. Very good. Not a laughing matter. Very, very good practical strategy there.
That is a leading lady in the FBT industry.
Yeah.
Very good. So opportunity knocks for accountants in practice. 800,000 plus registered employees out there not registered for FBT. It's time to go and help them. Time to go and educate them. As painful as that might be, and I appreciate there's pain in doing that when it's FBT. So the ATO, as I said, in terms of looking at ways to close that FBT gap to make sure that employers are meeting their obligations, they're extending their random inquiry program. So it is random in nature.
I love the name, random.
Yeah, that's right. So it's like an audit. You treat it like an audit. It's very resource intensive for employers. There's a lot of information the tax office need when they do an employer obligations audit, around your FBT, pay as you go, super. They'll come in and they'll suck out all of your data out of your payroll system, analyze that data. A couple of things that
I can't believe it's random though, given the amount of work that's required. They just randomly pick someone off the street. That's just terrible.
Yeah, it does seem terrible, but we've got to be aware of this. The tax office is well aware of all these massive payroll controversies that have been going on for quite a few years now. They've all been front page news. We know all about them. The 7-Elevens, government departments, large corporates, there's been so many of them. And whenever I see a payroll controversy, I always say where there's payroll smoke, there'll be an FBT fire, because of the fact that if you can't get your payroll right, and look, I'm not discounting how difficult and challenging payroll is, but if you can't get that right, and most organizations have a payroll team, payroll manager, specialists in that area, how many organizations have an FBT expert or an FBT specialist? Very few. A few government departments, a few very large corporates. So where there's payroll smoke, I always go, I bet they're not getting their FBT right. So the ATO's data matching program on novated leases. So the tax office ran a data matching program on novated leases a few years ago. The first year they looked at it, it was covering a 33-month period. So they're kicking this off again. And they're kicking it off for the 2024, 2025, and 2026 FBT years. It's a mandatory requirement where they are contacting the novated lease managers out there, the big ones, Macmillan's, Smart Group, SG Fleet, Eclipse Group, LeasePlan, LeasePlus, Toyota Fleet, Oryx. So they're contacting each of those organizations and saying, please provide us with all of the detail in relation to the novated lease arrangements that you're managing on behalf of your employer clients. So a significant amount of data, the lessee or employee details, their date of birth, their contact telephone number, their email address, a lot of personal type information, the employer identification details, their ABN names, contact details, all of those things. And then in terms of the lease itself, the start and end dates of the lease, the number plate, rego of the vehicle, the type of vehicle, the category of vehicle. Because what we see from time to time is vehicles that are categorized incorrectly. So non-cars or vehicles with a carrying capacity of 1 ton or more being categorized as a car. It's a big distinction, cars versus non-cars, in terms of FBT and the FBT implications. So if you have novated lease arrangements with any of those large managers, or your clients do, then you should be receiving a courtesy letter from them or some sort of communication to let you know that they have a mandatory requirement to provide all of the details that I've just had on the slides here. And as I said earlier, we've sort of already preempted this. We talked about, what the nudge messaging is all about and what the specific issue is here. But the ATO aren't conducting these novated lease, this data matching activity just in terms of motor vehicle expense deductions. It's much broader than that. But this is just one area that they've highlighted. They want to make sure that there's reminders there when individuals are doing their income tax returns that they are not claiming an offset deduction or not doing the double dip. So the ATO have been very transparent on their website in terms of audit activity. They call them reviews, but I mean, they're audits. Here we've got an example of employer not registered for FBT. They had several vehicles, including a Jaguar and a Range Rover. And so the employer claimed that private use was 15% of those vehicles and offset by a contribution. But in order to claim that 15% private use, you would need a logbook or logbooks to evidence the fact that there's 85% business use. But not surprisingly, the logbooks did not exist. And also, there were actually no contributions. So the financial upshot here was that there's 450K FBT liability raised over 4 years and a 50% penalty imposed of 220K. So we're talking serious dollars here for a small business.
Yep.
So this is one of the 800,000 plus employers not registered for FBT. Well, they are now. They're now in the system. They're now registered following the audit because I now had to lodge returns.
Naughty, naughty.
Another example, we've got an employer, had several vehicles. One was a 2-door Mercedes convertible, which sounds very much like a work vehicle, and a 7-seater Volkswagen van, so about 330K worth of vehicles. The employer's argument there was that Mercedes was used exclusively in business, and the van was exempt from FBT. So to be used exclusively in business, then there would need to be a logbook to evidence that. There were logbooks, but the logbooks were invalid. They didn't meet the requirements. The van was not exempt from FBT. So here, 100K in FBT liability raised over 2 years, 75% penalty of around 75K imposed. As I said, once again, these are significant, liabilities that employers are getting hit with.
Who would have known that a Mercedes convertible is, not a car?
Exactly.
For work purposes.
This is an interesting one, actually, because the tax office's big focus recently has been motor vehicles. But here we've got a different audit, a 3-year amendment. So this is an employer that operates a restaurant. And the tax office picked up that there was there was extensive expenditure for overseas travel and meal entertainment. And so supposedly that travel was to research similar cafes and restaurants. However, in part of the ATO's investigations, we know that they have access to a whole range of data. They can get data from e-tags, Sydney, Melbourne, Brisbane, that's relevant too. But here specifically, they are able to basically get data in terms of immigration, who's going in and out of the country. And what they saw here, that there were 4 employees who all traveled together at the time. So basically, they went on a entertainment holiday overseas. And so the tax office effectively denied those deductions. Now, I don't know the full detail behind this one, but yeah, it seems to me like it was a holiday dressed up as a work trip.
Yeah. Yeah, I'd love to go to Heston's, Fat Duck in London for research purposes as well.
Yes. So we just need to be mindful as well in terms of this ATO focus. As I said, the immigration data, is at their hands. And then one of the key things around immigration data as well is visa costs. So they can access all the information in relation to visas, who's been granted visas, and then to see if employers are then paying FBT on those visa costs, if the employer is paying, or reimbursing those visa costs. So that's temporary visa renewals, extensions of temporary visas, and also permanent residency applications. But it's not just the visa costs that are subject to FBT. It's also the agency or immigration firm costs that are also subject to FBT. And they're also reportable onto the employee's payment summaries, which is also really important because if you're not getting your FBT right, there's a whole lot of knock-on effects to that you won't be getting right. You won't be getting your reportables right onto the payment summary, and the ATO can levy penalties up to $2,200 per incorrect payment summary. It also means you're not getting your payroll tax right. The grossed up value of fringe benefits need to go into your payroll tax. One of the things that's been coming out from some of the recent GST reviews that the ATO have been conducting is they have been asking the question to ensure that employers are aligning the GST claimed with the treatment of entertainment in their FBT returns. So I guess a simple example of that is, say, if on your entertainment expenditure, if you've been claiming 50% of the GST throughout the year on your entertainment, but then come FBT time, you decide to use actual method. And then as part of using actual method, you take advantage of the key exemptions that are available, the on-premises exemption, the minor benefits exemption. If you claim those exemptions, then you save on the FBT, but you are denied the ability to claim GST credits. And so therefore, you need to pay back those GST credits and the BAS the next BAS you lodge after lodging your FBT return. So you need to reconcile and align your GST, and specifically in relation to your entertainment. That's one of the key areas. And the other thing you need to do is align your income tax deductibility around your entertainment as well with your FBT treatment. FBT is like the leader here. FBT leads the way, and then the others need to fall into line or align.
FBT is the lead domino.
Yeah, exactly. The double dipping on the motor vehicle expenses, which we mentioned before, that's a key interaction. Payroll tax reviews. The tax office will share information with the state revenue officers in each state and territory. The state revenue officers are pretty active around their payroll tax reviews, and they will be asking the question about fringe benefits. And as I said, it's not just including the fringe benefit values, it's actually including the grossed up values of the fringe benefits. And we need to include those in taxable wages, plus also for our work cover premium calculations as well. So taxes on taxes. I mean, it is what it is.
I hate FBT. Anyway, Paul, we got 10 more minutes left, just to give you a time check.
Thanks, Joyce. So we've talked a bit about some gaps today. One of the other gaps that I talk about in relation to FBT is what I call the 32-year gap. So 32 years between when the FBT law was introduced and when the ATO really, and I'm simplifying it a bit, and then in terms of when the ATO popped their head up and started looking at FBT on motor vehicles. So 1986 was the year the FBT law was introduced. That same year, the ATO released a whole range of miscellaneous tax rulings, MT 2024, 26, 27, 33, 34. Sounds like my body measurements, not. Those rulings, they're still all current rulings. They're still all in place. they're a good read. For anybody that believes utes are automatically exempt from FBT, because that's the big myth that still floats around, that they're exempt from FBT, have a read through those rulings. That'll change your thinking. But as I said, it took the ATO 32 years to really come out with something, some sort of guidance in terms of motor vehicles. And specifically, they came out with PCG 2018-3 in July 2018, which is the ATO safe harbor guidance around claiming exemption on eligible commercial vehicles, which is effectively utes, single cab, dual cab utes, and vans. That's what it sort of boils down to. So it's no wonder, though, that these myths have perpetuated because of the fact of, as I said, the 32-year gap. The tax office didn't help things as well, in that they used to have on their website lists of vehicles, utes and vans, that were exempt from FBT. And so employers, it was natural for employers to go to those lists, and they were structured in terms of by manufacturer and year of manufacture. So you'd have Toyota, and in say 2013, they would have, 20 different variations of their Hilux listed there. And then next to each of those vehicles, the tax office would basically state whether it was exempt as a car or exempt as a non-car or a residual motor vehicle benefit. And so you jump to the conclusion then, as an employer, it's natural that if you see your vehicle there that you've got in your business and it says it's exempt, you claim exemption. However, what the ATO, I think, weren't really clear about was these are vehicles that are eligible for exemption. That's one part of the test. The second part is that basically there's no private use or minimal private use in order to claim exemption. It's a two-stage test.
Click the next animation, it'll come up. The truth. Yeah.
The truth. We don't like the truth, but the truth hurts. But the truth is, if it's a ute and the private use is limited, then FBT exemption may apply.
Great. Can I just ask the audience, is this myth still a thing? Like, surely not. Like, surely it's been years, right? So yeah, let me know for those that have a lot of tradie clients. Definitely still a thing, according to Kerry. Thank you. Right. All right, moving along.
And I don't have a ute either. I don't have an electric vehicle, and I don't have a ute.
You're so not rotting the system enough, Paul, for someone that knows all the rots. Yeah.
So in a nutshell, this is what we need to look at in terms of claiming exemption. We've got two options. We can go down the path of the FBT law, or we can go down the path of the PCG. The FBT law says that we can use the vehicle to drive from home to work, work to home. The PCG says we can also. The PCG says we can actually divert in each direction, home to work, work to home, but no more than 2 kilometres. The PCG says that the vehicle must be used for work purposes. The law doesn't say that. The PCG says we need a written policy limiting the private use of the motor vehicle, and we also need to get a declaration from the employee. But the law is silent on that. We don't need a declaration from the law. The PCG says that the vehicle has to be below the luxury car tax threshold, but the law is silent on that. It's not a requirement.
Okay.
In terms of can the vehicle be salary packaged or provided as part of remuneration, it's a big no from the PCG, but the law is silent on that.
I'd stick with the law. Utes are expensive,
Yeah, that's right. Well, yeah, there's no point driving a cheap ute. In terms of private use, the law says that the private use has to be limited to minor, infrequent, or irregular private use. The ATO's interpretation of that is using the vehicle on 2 or 3 occasions across a whole FBT year. It's even worse this year because we've got an extra day. So we're going to limit it to 2 or 3 occasions across 366 days for this year, to taking some personal rubbish to the rubbish tip or maybe moving some furniture. But the ATO says, in terms of the law claiming exemption, once we push that, if we push a boat down the boat ramp, if we go on a camping trip, or we take the kids to sport on the weekend, one weekend, we've lost the exemption. And people complain about this and say, well, that's just not fair, etc. Well, but it's an exemption. The whole idea is it's a work vehicle, yet you can take it home, park it at home. Because ordinarily, if it's not a work vehicle, if it's like a sedan, you take it home, a vehicle home, and it's available for private use. And so it's taxed in that way. It's either available in use for private use, or it's deemed to be available. But here with the ute, we've got this exemption that says we can take it home and it's not available for private use. But if we do use it for private use, and as I said, it only has to be a couple of occasions, then we lose the exemption. So that's the distinction here. Whether we like it or not, this is how the exemption works. And like most exemptions, it's all or nothing. If you're not exempt, you can't claim it, then it's fully taxable to FBT in some way, unless we keep logbook records.
Yeah.
The PCG, though, is a little bit more generous in terms of the private use, because it says we can use the vehicle for up to 1,000 kilometres for a wholly private purpose, as long as there's no single return journey for a wholly private purpose that is greater than 200 kilometres. So, yes, it seems a bit better than the law. However, we have to remember here, we're still talking about the average of 20 kilometres a week of private use. And as well as that, we need to make sure that we meet all those other requirements. I've been talking to employees and they say, yes, we get a declaration. Do you have a written policy? Well, no, we haven't. Well, you can't claim the exemption by just getting a declaration. You need the written policy as well. You need to make sure you're meeting these other requirements. So the tax office, as I said, 2018 was when they set the trap, when they released this PCG to effectively trap employers around claiming this exemption. If it wasn't for COVID, they probably would have started a lot more audit activity, compliance activity earlier. So it wasn't really till the back end of COVID that they really started rolling out the compliance activity, hence those examples that I provided earlier of ATO, FBT audits.
Amazing. All right, I've got 2 more minutes. How quick can you cover our reduction in FBT record keeping? Does it apply to logbooks? We don't need logbooks anymore?
Wishful thinking. So, whoops, we one step too far. So a few years ago, the government announced, they said, look, we're going to reduce, they appreciate the burden around record keeping for FBT compliance. So we're going to reduce the record keeping requirements. And, we all started dreaming, I guess, about what this may mean. So this was then handballed to the tax office. We've done a lot of work with the tax office through the stakeholder group around these areas as well. Effectively, what we're talking about here in terms of where we've got waiving of specific FBT record keeping requirements, they're being waived in relation to travel diaries and employee declarations. But we still need all of the data and information. It still needs to exist within our existing corporate or business records. So for a travel diary, the dates and times in terms of the journeys and trips and meetings, we still need all that information within our records. And as I said, just one important point to note is that this reduction in record keeping requirements kicks in on the 1st of April, 2024. So it's not applicable for our 2024 FBT returns, but it will be for 2025. So we still need to go and secure travel diaries, make sure we're maintaining travel diaries, and we also need to ensure that we are obtaining declarations from employees. So there's a number of areas here where the declaration requirement is being waived. Relocation transport, where we're claiming on a cents per kilometre basis. The second sort of tranche or area, once again, is to do with employee declarations, and the same with the third tranche. With that third tranche, there's a couple of key things here that I just wanted to highlight. And we actually have highlighted them in yellow. So otherwise deductible benefits, very key part of FBT law, business travel, professional memberships, a whole range of things that are otherwise deductible. Rather than getting a the declaration from the employee, that's now being waived, and employers from 1 April 2024, it's been waived. Employees can now use corporate credit card statements, or they can use expense management software as alternative records. So they can effectively build into, say, the expense management software, the rules or statements that the employee signs to, attest to, in terms of the otherwise deductibility or the fact that the expense is being incurred in earning their assessable income. We've also got the waiving of living away from home declarations. The first declaration requirement in terms of maintaining an Australian home, the second one in respect of fly in, fly out, and drive in, drive out arrangements. And both those declaration requirements are independent, because you don't need to maintain an Australian home if you're on a FIFO or DIDO basis. So with the maintaining a home declaration, as long as you have that information within your records, so it could be part of the employee's onboarding process or in part of their arrangement or agreement for living away from home, you can capture that information. So this is a really big one, because if employees leave during the year and you don't secure a declaration from them, because living away from home declarations currently are look-back declarations. So you're looking back across the FBT year. But what we're saying now is we don't have to look back as such, as long as we have the information. But as the point I was getting to here, if you don't have a declaration in respect of living away from home currently, you don't get a reduction. So if an employee's left and you can't track them down and entice them to complete the declaration, you've got to pay FBT on their living away from home benefits, which could comprise of accommodation and meals. For the FIFO DIDO employees as well, as long as we have the information within our employment contracts or within our records, the fact that the employee is working on a FIFO DIDO basis, is returning to their normal residence when they come off their rotation, work rotation, then we don't need a declaration. But currently we do for this year. Private use of vehicles other than cars. So here we're talking about our 1 ton plus carrying capacity utes and vans, or other vehicles that carry more than 8 passengers. So ordinarily we need to get a declaration to evidence the number of private use kilometres, but that's being waived. So that as long as we've got other alternative records, and so the ATO is accepting of things like mobile apps, GPS type recording devices as well. So, I think these are quite significant. These will have broad application here in terms of the waiving of the employee declaration. So not a lot of time to think about it for employers. As I said, it starts 1 April 2024, but it's important to be aware of these and look to see where you can take advantage of these reductions in record keeping. This isn't the end of it too. The ATO may be looking at other areas to reduce record keeping requirements in the future. And so we have to welcome these things, thank them for these initiatives, because they are positive.
Absolutely. Oh my gosh, that's the end of our content slides for today, but heaps of Q&A, which we'll get to in just a bit. But yeah, thank you, Paul, so much for all of those. You will see Paul back again. So he is doing a FBT Accelerator program, which is coming up on the 10th of April. It's 11 epic sessions over 8 weeks, and will cover key concepts in the first 2 weeks, including how to prepare a return, and then deep dives into each type of fringe benefit in every Friday, FBT Fridays, up until the end of May. And this program is included at no additional cost in all our subscriptions. So if you liked what we were serving today, feel free to check us out. Head to taxnuggetsacademy.com.au and check out our plans and pricing. I know we're running over time, so for you all that need to leave, we're just going to launch the poll. Let us know what you thought of today's session. Thank you very much. Thanks, Assistant Nugget. And I did see a couple of questions, first of all, on whether the recording is available. So all Tax Nuggets events are recorded and uploaded into our replay library, which are available for VIP and team subscribers. So if you want to check out the recording, feel free to sign up for a 10-day free trial to access the recording, and it's usually available within the next 24 hours. Okay, so let us go through our Q&A, Paul. How much more time do you have to stick around?
Always have time for FBT.
Oh, thank you. Hopefully, yeah, maybe we'll get through it the next 15 minutes, I reckon. I've picked up the gems. There are some very good questions in there. So first question is from Rochelle. Do you have any recommended FBT client query sheets? Or do you know of any good ones? Do you have one potentially that you use? And feel free for the audience as well to put in your recommended, template or anything like that that you've seen in the chat.
Look, we have a detailed checklist, which we provide. I think that this will be something also that will be part of the accelerator program, a checklist, which I think is really important. Yeah, so that's all I can sort of, I guess, answer on that. There's a one-pager. I'll share it with Joyce. There's a one-pager ATO FBT audit checklist, and it's a really good one because of the fact it's very succinct. It covers all 13 benefit categories in the law. So that's one that I recommend people printing off or looking at and sort of ticking through it, maybe using a pencil or something. To see whether they are exposed or not. It's a very good one-pager checklist.
Amazing. Yeah. Is that available online?
I'm not sure if it is, but I can send you a copy.
Yeah.
Great.
Yeah,
Share it.
that'll be good. And yeah, we'll can put it into the resources page on our replay library. Amazing. What else do we have? Linda has a question about a lot of car questions, especially around the EVs. Paul, PCG on the I think it's charging the 4.2 cents. Is that really merely for reportable purposes only? Because that wouldn't impact the actual FBT liability because the electric vehicle is exempt, correct?
Yeah, that's right. So no, it's not just for reportables. I use that, I guess, as an example. Really what it's there for is if the employee is charging the vehicle at home, then it gives them a mechanism or method to calculate how much they can claim back from their employer in terms of those charging costs. So that's really what it's there for. It can also be used by individuals, so non-employees, in terms of claiming a deduction via their income tax return as well. One thing the PCG doesn't cover the plug-in hybrids, so it's only relevant for the electric cars.
Understand. Yep. And Linda has asked, I don't know if you know this off the top of your head, Paul, is the 4.2 cents inclusive of GST? That is such an accounting question.
Yes, it is. It's inclusive of everything. It's an all-up rate.
Amazing. Another question about cars, electric cars. Charging cables, is that exempt given how crucial it is to charging the car? You need it.
Yeah, so if you're separately paying for that cable, that charging cable, then it won't be exempt. So, and if the employer is paying for that or reimbursing it, it won't be exempt.
Understand. Yeah.
So just to, I guess, clarify that a little bit, in terms of, if you're purchasing an electric vehicle, it'll come with a cable, some sort, so you can actually function. But if you're buying anything separately, some sort of, I'm not really technology savvy, but some sort of, heavy duty cable, additional cable for your, say, a charging station at home, then that won't be exempt.
Yeah, because that's a separate thing from the actual car itself. Yep. Hopefully that answers your question. Moving on to another one by Bernaldo. EVs again. They're exempt for FBT, but then they've got. Can you tell us what the payroll tax implications are again? Like, is yeah, does it need to be counted as taxable remuneration for payroll tax purposes?
Was that the EV?
Yes.
No, no, it doesn't. So
Oh.
because it's exempt,
Mhm.
then it's not included in terms of payroll tax. Um, and it's not included for not-for-profits who have exempt status. It also doesn't go towards sort of utilizing some of the cap as well. So just while we're on the topic of what's in and what's out. But if the electric vehicle is taxable, then yes, certainly it will go towards the grossed up value will need to be included in the payroll tax.
Okay, ute exemption. Janine has asked, so which one should we rely on? Like the FBT law or the PCG?
Your
Any
choice, really. I mean, it's like your,
oh,
it's like your meal entertainment, 50-50 or actual, it's your choice based on your records. And really, part of it is, yeah, what are your records? I mean, if you don't have a policy, you're not getting declarations. If they are, vehicles subject to luxury car tax, well, then you have to use the law. You can't use the PCG. But then with the law, then the big sticking point there is the private use, ensuring that effectively that private use is eliminated. So it's really going through that slide and I guess ticking down those items and determining from there, what realistically or practically which one can you choose in terms of claiming exemption.
yep, yep. So yeah, make sure you get a copy of the slides. Should be in the chats somewhere. And I think I'm going to take just one last question, given we're almost 15 minutes over time. Thanks, Paul, for staying back. Do you have a recommended logbook app?
Um, no, look, I don't. Yeah, look, there's a lot on the market. What I would recommend though is if you're looking at the logbook apps, I would only choose one that has a class ruling from the tax office, so that it's been effectively signed off and approved by the tax office. The one that we have used with a number of our clients in the past is, and they continue to use them, is Logbook Me.
Logbook Me. There
Yeah,
you go,
Logbook Me.
Captain. That's an alternative to driver's note. Yeah, I've never heard of all these things.
Yeah,
Yeah, whenever there's a problem, there's an app to solve it.
that's right. That's right. Yeah.
Amazing. Okay, it's 11:45. I'm going to end the webinar. We just did another poll for those that are still around. There's almost 300 of us still here. Thank you so much for staying back. Please let us know where you heard about us. Particularly if this is your first webinar, yeah, that is excellent intel for us to be able to spread the love and spread the wealth of knowledge. So thank you very much. Any final key takeaways, Paul, before we end our wonderful session today?
Look, I think, FBT is a challenge, and there's a few challenges I've talked about today. There's plenty of other challenges that I haven't talked about. But I think, with the tax office really focusing now on FBT in a number of different ways, conducting audits, etc., it's a time of opportunity for accountants, whether we hate FBT, or we, like me, sort of love the area. For accountants in practice, it's time to really put your arms around FBT and embrace it because, for your own practice purposes, but also to help your clients, and the more you push it in terms of being compliant, registering, that, the easier it will be over time. But also, it's not just about compliance. There's a lot of opportunities in the FBT space in terms of exemptions, in terms of salary packaging as well. So if you're not engaged with FBT, you're not going to be utilizing or, capturing those opportunities as well. So that's sort of my closing comments.
Absolutely. Opportunity, always a silver lining, isn't it?
Yes. Yeah.
Great. Thank you so much, Paul, for this insightful session. And thank you of the amazing audience for being so engaged. And hope to see you in our next live event. And hopefully it's the FBT Accelerator Program. All right. Thanks
Thanks,
all.
Joyce. Thanks, Tax Nuggets.
See you next time. Bye.